Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can listen to all of our podcasts at americastalking.com. To support podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Thursday, August 17th. And joining me, as per normal, Dr. Orphe Divounguy, PhD economist and all-around good guy. Dr. O, let's get right into it. Talk about some housing stuff that's happening. Big headline today, mortgage rates hit 7.2%. That's on a 30-year fixed conventional loan, the type of loan that the vast majority of Americans would take. And at the same time, builder sentiment not looking great. It fell. You said earlier in the pre-show, we were just kind of chatting about things, that it's still above, where it had been. But these are interesting indicators. Make sense of them for us, if you could.
A lot of people had predicted the mortgage rates would be coming down this year. We weren't among them. Let's just put it that way. Mortgage rates really depend on inflation and future expectations of inflation and economic growth, which incorporate interest rate risk. And basically, the stronger economic data suggests that the Fed will not be out there buying treasury bonds and mortgage-backed securities anymore. And in fact, they're letting them roll off their balance sheets. And so the Fed's shrinking balance sheet, combined with the increased size of government debt issuance. I mean, the Treasury plans to sell a bunch of debt, and so that is pushing Treasury yields and mortgage rates higher. And so yields are rising, mortgage rates are rising. The economy is really strong, at least stronger than expected. And so, I think people are worried it's having an impact on the housing market. Essentially, higher mortgage rates cool housing demand, but they don't just cool housing demand. They also end up causing builders to pull back because, of course, they face higher financing costs, but they also have less potential demand for housing. So are builders really, really pulling back all that much? No, not really. I mean, I think builders are showing cautious optimism. You still have housing starts is still increasing, right? Builder sentiment's pulled back a little bit. Housing starts is still increasing. And they still have a ton of homes in the pipeline that are being built right now that are soon to be completed. And so, yes, we have to acknowledge the fact that housing demand peaks in the spring and that it slows down in the summer, and that buyers will come back again and get ready to get back in the market in January of 2024. And we're going to see an uptick again in housing demand. And this country still needs a ton of housing. If you look at house prices, you see the rebound in house prices. We had seeing a cool off, and then we started to see upward pressure again, even in some of the expensive markets. And so homes are needed in this country. And it's good news for us that builders are still at it, building more homes, and that they have not pulled back yet. You still have more people wanting to buy a home in this country than there are homes available. Housing inventory is nearly half of what it was before the pandemic. And that, you look at every indicator, we still need more homes. There was a 4.3 million home deficit in the US in 2021. And I think that, unless we continue to see builders build, we're going to be in trouble. So it's good news. Remember, builders are the key to bringing down inflation. Right? 30-40% of core CPI is housing. And so, so long as we have, new demand far outpaces the supply, the flow of homes coming on the market, I'm hopeful builders will continue to build. They have a strong incentive to.
What's your take on the buyer sentiment at this point? I mean, of course, that's typically measured in total transactions in a given period of time. Or
still very strong relative to before the pandemic. I mean, homes that sell are, yes, it has cooled down a little bit. Homes that sell now take a day longer than it did last month. The share of homes with price cut has increased slightly, which is why builders are cautious. but ultimately we still have a much stronger housing market than we did before the pandemic. It's cooled down from 2021, but it's actually rebounded from last year, and it's still stronger, much better than it was in 20. And when I say better, I mean still stronger demand. It's not better because we just don't have enough inventory. We're still facing a supply constrained housing market, and not enough homes to meet the needs that are out there.
I'm trying to make sense of it. I mean, these conversations that I have with people that are thinking about buying a home. I mean, the vast majority, of course, I live in Illinois. The vast majority of the conversations that I have with people that are talking about buying a home are not talking about buying another home in Illinois. They're talking about buying a home somewhere else, especially those, of course, those people that live in the greater Chicago market where property taxes are just off the chain. But I don't know. I mean, it just seems like there is an absolute tenuousness right now among the prospective home buyer, that they're just not sure, that there's still this feeling like, well, I should wait. I realize that prices are going up, but the mortgage rates are high. I'm not seeing the house that I really love. I look at it anecdotally, just going through some of the markets that I pay attention to and the homes that come on the market. And I'm seeing, and again, it's anecdotal, I'm seeing more reductions and longer times on some houses. I'm seeing some houses hit the market and be off the market within a couple of days.
Exactly. There's a lot on the buyer side. You have some people that have been definitely affected by the affordability issue. But let me give you a crazy stat. Even before the pandemic, a large fraction, something like 17% of families that were renting could still afford what buyers are paying today with a 10% down and above 7% mortgage rate. So a lot of Americans, out there that were renting in 2021 could actually handle a 7% mortgage payment. Now, some of them are faced with challenges like credit scores. And again, I think credit scores have improved a lot probably since 21, and we're seeing it in the Fed numbers. So challenges, down payment could be a problem. There are a ton of down payment assistance programs out there. In fact, Zillow makes it clear, makes it easy by making sure all the down payment assistance programs are basically on every single listing, which is, I think, a great feature to have. So you have people who are held back by affordability, and then you have people who probably can afford to buy in this environment, but maybe don't know it yet, right? Like 1 in 4 first-time home buyers didn't even know how much they needed for a down payment. 1 in 3 didn't know how much to bring to a closing. You have a lot of people who are just unsure. And I think, and I've said this many, many times, when people are unsure and they're uncertain, they sit on their wallets. They don't go out and buy stuff. And so I think it's for the housing community, real estate agents in particular, and mortgage professionals to educate potential buyers about their purchasing power, right? Most people don't put 20% down on a home anymore. So if you can afford the monthly payment and you have 7%, 10%, chances are you can actually buy a home in today's environment. Now, the last big constraint is, of course, the supply constraint. We know inventories, less than roughly half of what it was before the pandemic, and there's just not enough homes to go out there. The good news is builders are building, and hopefully they'll be able to close the gap.
I appreciate you weighing in on this. I think this is one of those questions that that people are rolling around in their minds, and I like the way that you went after that. So thanks again, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.